Welcome back to CNBC-TV18. It's time now to focus on the commodity markets on this auspicious occasion of Diwali. Well, we have seen the whole Samvat gone by on a very volatile note. We did see all-time highs for various commodities and then a very strong profit-taking as well. The way we have ended this Samvat has been off highs for most commodities, down by anywhere between 8% to 48% on the lower side as well. But how is the new Samvat now looking like? What is the next 1 year has in store for us? For that, let's welcome our guest. Ole Hansen is Head of Commodity Strategy at Saxo Bank, and Kunal Shah is Head of Commodities and Currencies Research at Nirmal Bang Commodities. Gentlemen, hi, thank you so much for joining us and very happy festivities to both of you. Ole, I'll start with you, and we're celebrating Diwali in India right now, and there's Mahurat trading happening. People pick stocks or commodities during this day and hope that they give them a lot of profits going forward. For the day today, where do you see a lot of interest coming in?
Well, happy Diwali, everyone. I think we're seeing multiple corners of support and strength still in this market, even though, as you mentioned, we've seen the market correct in recent months. When I look at the forward curve in the futures market, I'm still seeing tightness across most of the commodities, especially in the energy space. But at the same time, we also, I think will be approaching the time where we see the peak level of yields in the US, and from there we will see potentially a weaker dollar, and that really will be a major trigger, I would say, for some of the metal markets at this point. We also see in other markets where there's been really strong support in recent months. Something like coffee has been holding up very well, but just in recent weeks it's had quite a decent collapse, and that is simply because the market is switching the attention away from not so tight conditions to the global economic slowdown. So multiple uncertainties coming in the coming quarters and months ahead. So plenty of things still going on in the space.
Oh, well, absolutely. But I like it. The energy and coffee is what you've spoken about in your first commentary itself. Energy is what we'll start with as well. And your sense on this, Kunal, because we've seen, this one make headlines constantly. Every time we've spoken about Russia and Ukraine and US and US dollar and the weakening Chinese demand. I mean, today as well, the markets are reacting to the weak data that we've seen coming from European Union and China as well, is the reason there is some pressure in the crude oil prices. What's your sense on how the coming months, quarters could be when you look at energy?
See, right now, oil prices are not able to move up mainly because of the weak Chinese demand. Because of the strict COVID policy over there, the Chinese demand is relatively muted. But from the month of November, the production cut of 2 million barrels per day is going to be effective. And that is going to be bullish for oil. And at some point, like people are talking about Fed pivot, people are going to talk about China pivot, because at some point they cannot afford to continue with this zero COVID policy for a longer period of time. China, remember, consumes roughly 10% of the global demand comes from China. And if Chinese economy opens up, I think the Chinese demand is going to flare up. And above that, we have a production cut of 2 million barrels per day. So we are entering 2023 with a deficit of 2.5 million barrels per day in oil, which is fundamentally bullish for oil. So the only bearish scenario for oil is that US enters into a recession, which doesn't seem to be the case right now. Maybe perhaps 4, 5 months, 6 months down the line, that can be the case. But right now, it seems that the first half of 2023, we are not going to see any major downside. 75 for the Brent seems to be the bottom for oil. And on the up move, it has a potential to test $95 to $100 per barrel. So energy market remains quite tight right now.
Fair point that. Ole, how would you look at the natural gas? I mean, we've seen much of those prices come off its highs. So whether it's US, UK, Europe, the natural gas fears do not seem very strong right now. How are you looking at the months to come?
Well, I'm not wearing a jumper, and that's one of the reasons why. We got a very mild autumn so far in Europe, and that basically led to negative prices briefly today in the next hour gas price in Europe. So a complete turnaround from what we've seen in recent months. So the combination of strong arrivals from LNG, the demand being cut back both voluntarily and involuntarily, and together with the very mild weather we have, has really changed the situation somewhat. So we're not out of the woods by any means. We need to see mild winter basically over the coming months to ensure that we have enough gas in stocks that makes the next rebuilding phase not as painful as the one we've just been through. If you look towards the US market, gas prices basically collapsed. We're down more than half from the highs. And again, for a change, we actually seen US, not oil producers, but gas producers respond to the higher price we had over the winter. More rigs has been put in place, and that basically means production has been going up at a time where the export capacity has been cut back due to an explosion we had at a plant a few months ago. That will only start to recover late this year, and that obviously will support the global market, but it still probably keep prices low. So at least the gas market is sending some good news to the global consumer.
So some good news that could come in from the gas prices, at least for the markets. You know, Ol, we were talking about the equity markets before the break, and most experts believe that from here on, these are buying levels, and the worst period perhaps is behind us. They did not seem so worried about recession going forward. How are you reading the markets for the next couple of quarters? Because much would depend upon, one, the rate hikes perhaps are factored in, the US dollar. How are you looking at that going forward?
Well, I think that the US dollar is going to peak out in next 1 or 2 months. So I'm expecting that in the month of December, the rate hike in US is likely to pause, because you see what is happening every time with we are nearing the rate hike. So for example, we are nearing the rate hike in the month of November, and already we see a tremors in the US bond market and global bond market. We've seen that happening in UK. We've seen that happening in Europe. So I don't think so that bond markets cannot take this aggressive rate hike. So we are going to see that moment when somebody is going to blink their eye. And I think in the month of latest, I expect that to happen in the month of December. So that is going to be a big moment. I mean, the moment Fed blinks and they say, okay, look, we cannot hike more from here, and we are going to see the tightness which is there in the credit markets right now is going to disappear, and we are going to see some risk-on movement after that. And that is going to trigger some, again, you know, big moves in commodities, especially bullions.
Okay. So, Ol, if you were to make a portfolio going forward from here, what kind of commodities would you have in? Is it going to be energy, metals, agriculture, or precious metals? How will you spend your, let's say, $100 within all of this?
Well, I hate to speculate in food commodities, but I think generally if you want to be exposed to commodities, then look for the broad exposure, because we've just seen in some of the data coming out of China now with regards to imports that one of the so-called king of green metals, copper demand, copper imports are one of the few commodities where we're actually seeing an increase year on year. And that just highlights as well that the green transformation will continue to attract increased demand for several key metals. The Russia situation with exports and so on, potentially also adding some support. It was mentioned, I agree with the energy situation. It's not really what crude oil does, it's more what the refined products does. And we see tightness both especially in the distillates, in heating oil, in diesel, and that will continue to underpin the price. And obviously not made any easier by the fact that OPEC Plus production cuts are primarily coming from the Middle East. The grade that they produce is perfect for diesel and not so perfect for gasoline. That basically means we are missing those barrels to produce all the diesel that is required. So I like the energy sector as well over the coming months.
All right, so complete buyer in energy there. Kunal, what is your portfolio looking like in commodities?
Well, I think I'm clearly telling all our viewers and everyone who's watching this show, this is the best time you can buy precious metals, gold and silver. They are going to outperform going forward the entire commodity universe. And I think we are going to see a fantastic returns in 2023. Next 1 or 2 months, it can still remain choppy because of the impending rate hikes by US and even by the ECB. But I'm very sure, I'm pretty confident they cannot be aggressive from here. The bond market has already started to show signs of problems. And looking at that, this is the best time to accumulate. Next 2 months, you buy gold and silver, you store it, and next Diwali we will see, conservatively in gold, we are going to see 8 to 10 or 15% return, and silver is going to move up by 20-25%. So very bullish on gold and silver. I will allocate if commodity, I'm making a commodity portfolio right now, a commodity basket. I will give 50% weightage to gold and silver.
Okay. All right. So bullish on gold and silver, and that's exactly what we will talk about after this very short break. We continue our conversation. We'll also have with us Philip Newman of Metal Focus, and this whole focus now will be on gold and silver after this very short break. Welcome back and wishing you a very happy Deepavali. And this is Mahurat Trading, and all eyes on gold and silver now, where there has been a bit of a disappointment in the US dollar term, but clearly not when you look at the gold's performance in other currencies like the Indian rupee, the pound sterling, the Turkish lira, the euro or the Japanese yen. The gold prices have given you returns anywhere between 5 to 15% in many of these currencies. And all that really is the point, right? Because you can't look at a commodity in one particular currency, and gold clearly has displayed that.
Exactly.
Yes,
I'm very happy that we have a section about this as well. Oh, sorry. Was it me?
Yes, all it is to you.
Okay, sorry. Yeah, I'm happy that we have this section as well, because I didn't mention that in the previous, because obviously gold and silver remains a key part of my investment outlook, because the way it's been behaving this year to many has been disappointing. I see it actually as quite a strong performance in a year where the dollar has strengthened as much as it has, and we've seen this massive jump in bond yields. And the gold is still, in my mind, an insurance against the policy mistake. And I think we just need to look at where inflation expectations are priced out in the future. I think it's way too low compared to where we're going to end up. We're seeing a breakdown in the global trading channels, and basically the whole transition we're going to face will be more, will cost more, and that will bring inflation at a higher level than we're currently pricing in. So with that in mind, gold and silver is likely to be a good performance in 2023.
Kunal, you've been very, very bullish on gold, as you told us before the break. But what about silver, and what levels would you see in case of silver in the months to come?
Okay, so the silver for us to remain bullish is the supply side shortages have already developed because of the sanction on Russia. So 3 to 4% of the global silver supply comes from Russia, and that is having its own issues right now. So that the supply side is weak right now. The demand side is pretty bright right now. The demand outlook of silver looks very bright from the solar sector, from the green technology, from the electronic cars, from the electric sector. Everywhere, the demand is rising. Next year, the demand is expected to rise by 8 to 9% as far as the industrial demand is concerned. So silver is going to give you that beta, what you are alpha, which you are looking for. The beta of silver is pretty high. And the moment the shortages develop and the dollar gets weakened, silver is the one which is going to move up quite sharply. So in the dollar terms, I'm expecting, $17 to hold. And we are going to see conservatively $23 to $23.5 for silver next year. And on Indian bourses, it should translate somewhere between 80,000, 78 to 80,000, considering that the Indian rupee is also likely to strengthen when the dollar starts weakening. So I'm expecting 78 to 80,000 quite conservatively for silver next year.
All right, so buying silver is definitely in right now. Ol, how are you looking at the dollar index? Because much would depend upon on where dollar index is headed and how we look at the other currencies perform.
Yeah, well, we're clearly seeing that the Bank of Japan is getting increasingly troubled by the very weak yen that we've seen now in recent months, and they're starting to make an effort to bring that under control. Potentially, the timing of this intervention in dollar yen has by some been seen as maybe a precursor for the Fed going a bit more less aggressive on their rate hikes. Obviously, we will see that after the early November FOMC meeting. But generally, I'm in the camp as well that we do expect the dollar to roll over once we get a sense of a peak in the bond market. And obviously, the movements we had last week was quite a strong one, both to the highest upside in yields, but also to the downside. So I think we're getting close, perhaps within the next few months, and that really would be the signal that trigger a renewed focus on the investment metals, especially because it has been under so much pressure from this dollar strength for so long.
Before we get Philip in, I also want to get an agri strategy from both of you. And Ol, what would you be looking at in agriculture going forward? What is your most bullish bet on, and if you had to choose one?
Well, I think simply the one where we still find trouble with the supply side, and that is some of the key grains. We're still seeing a soybeans demand in China up on the year. We're seeing wheat still being troubled by the war in Ukraine, and with the prospect of that situation not improving anytime soon, that will continue to, I would say, keep the global grain market relatively tight. Also, we have to remember we have another La Nina unfolding this coming winter. your summer or further south in the summer, that will also play its part and potentially create some risks of tightness in the market. So I'm looking at the grain market in particular.
All right, grain, wheat, coffee, all on the radar there. Kunal, what is your one top strategy in commodities when it comes to agriculture?
I think cotton next year looks pretty good, considering what is happening. We have seen a great correction in the prices right now, but going forward, the shortages will develop. So I'm bullish on cotton next year, and I'm expecting, after a slowdown next year, the demand revival is also going to take place. So I'll recommend to go long in cotton.
All right, those are some of the commodities to keep an eye on. Thank you so much, Ol, Kunal, for joining us. And I'll go directly to Newman, Philip Newman now, who's MD Metal Focus. Philip, we were talking about gold and silver, and Ol and Kunal are both very, very bullish onto this, especially on a day when Indians do go out and buy gold because they believe that the wealth will double up from here on. What's your sense when you look at gold prices for the next 1 year from here?
Very, very good question, especially with the volatility that we're seeing. I think from our perspective, and bear in mind, we look at the market in dollar terms rather than rupee, but from that perspective, I think, to be honest with you, Manisha, we are expecting gold prices to largely weaken over the next 12 months or so, both gold and silver from that perspective. So we think that they will trade in quite a volatile fashion, but it will be in a modestly downward trend.
You know, Philip, there are a lot of skeptics in the market who do not believe in gold anymore, especially the way it has behaved with the inflation high, recession concerns, and even that we've seen prices decline. But having said that, gold has performed much better than various other asset classes, because when you look at equities, bonds, currencies, it has done well as comparison to many others. How would you look at the performance, and do you see a repeat of that in the next 1 year?
I think, Manisha, you really hit the nail on the head there, that even though we are seeing gold falling, it's absolutely pivotal to look at it relative to other investment vehicles. And as you rightly said, it has outperformed on that basis. So we do have that slightly unusual situation that even though institutional investors may not be increasing their exposure to gold, they will still, many of them will still take a step back and see how gold has performed. And I think that is something they'll be very mindful of when they're looking at their asset allocations. Now, when you think about gold prices weakening, then that obviously lends itself to investors perhaps not having to liquidate gold if they're thinking about reducing their allocations to the yellow metal. It will fall naturally given the gold price is falling. And obviously, investors look at these things in value terms. So I think you do have that unusual position that, yes, we have these rather significant headwinds that will discourage investors from increasing their exposure to gold. But at the same time, I think they certainly recognize how gold has outperformed as well.
Oh, well, yes. You know, just before I was talking to you, it was Ol and Kunal telling us that they do believe in gold a lot. You don't seem to be believing too much into gold. You believe that there is going to be volatility into markets. Do you see that in the rest of the precious metal prices also? Do you also think that it is going to be volatile going forward?
I think for silver, very much so. Obviously, silver is a much smaller market, and it certainly has faced its own challenges because, on the one hand, behaving as a precious metal, it suffered or is suffering in that regard. And on the other hand, as half of its global demand is industrial applications, therefore behaving or can behave as an industrial metal. And I think it has struggled there because of concerns about a recession looming, or global recession or recession in key jurisdictions. So we've certainly seen silver prices come under pressure. And so when we look at where silver is and what it can do, we do think that it could fall perhaps below $17 again towards the back end of this year. We're not expecting some of these prices perhaps over the next 6 to 9 months, but it's certainly something that we're looking at as we move through the quarters. from a platinum and palladium point of view, again, platinum is facing that headwind of the spillover effects from gold. I think palladium is a slightly different animal because you are looking at the easing eventually of the chip shortage. That should certainly help automotive demand. And so we think gradually prices could start to recover to some extent. Although again, because of these concerns about a recession, again, that could weigh on the metal. So when we think about some of these prices, if I can go back to platinum briefly, we think that, when we look a year out from now, the price may not look dramatically different. For example, our average price for the fourth quarter of next year is around $1,000. So that's obviously a little higher than when we are now. From a palladium point of view, we think that the average in Q4 next year will be around the $2,000 level. So I think there are certainly some important headwinds that these metals are having to contend with.
So you believe that the next couple of quarters perhaps will not augur well for the precious metal prices, but going forward, by fourth quarter, we are looking at higher prices there. So, central banks are buying and there's a divergence in gold buying because maybe paper investment is not so high, but clearly the physical buying in gold and silver has been on the stronger side, and so has been the case with other currencies as well. How do you look at this very divergent way of investing in gold and silver that we have?
I think you're absolutely right there again, Manisha. And again, I guess if we bring this back to India, we think about silver specifically, we know that Indian retail investors tend to be long silver, or they tend to have these positive price expectations. And as you rightly pointed out, the trend in the rupee is certainly helping that. And we only have to look at the sheer volume of silver that's been imported into India this year. It will hit a record high for the full year total. It's just eye-watering volumes that have been taken in largely by air freight, as many of your subscribers and listeners viewers will know. It has been quite staggering. So I think we are seeing investors in India really responding to what's happening in the rupee price. It's not all about investment in India, but that certainly is one of the key drivers behind some of those eye-watering import figures that we've been seeing recently.
All right. You actually put that point across with the numbers there that, yes, India is importing silver at record numbers in this year, so much higher than what we've seen in last many years. So silver, clearly consumption of that in India on very high. I have one final question, Philip. So you said you weren't so bullish in gold for the very near term and there could be buying opportunities coming in. Do you see a breach of $1,600 per ounce on the lower side as well? Is that a good buying level then?
Yes, you're absolutely right. So when we think again, if we think about in the coming months, but also as we step into 2023, from a gold point of view, we think that we could see gold perhaps get towards or even below the $1,500 mark towards the very end of next year. We think that will take some time to happen. I think before that, we could see gold trade around the $1,600–1,700 level, as I say, gradually moving lower. So I think that's what we're looking at from a gold point of view. So I mean, we've already seen it test even today. It was getting down towards the low 1600s as we saw a marked sell-off in equities. That may surprise some who are watching this, but as many of you will know, when you do see such a sharp move in equities or a downward move in equities, then you would see investors looking to sell other assets to meet some of those margin calls. And that's why you would see gold, in a sense, falling as equities do. We still think there'll be some rotation into gold, but from an institutional standpoint, which is absolutely fundamental to looking at the trend in gold, we think investors will take a fairly bearish view on the yellow metal. And really, the key reason for that is what's happening in real yields. And we think that real yields will continue to rise, and that will really be the main headwind as far as gold is concerned.
All right, so much will depend upon where the real interest rates go, the US dollar as well. But that's a list that the experts have given you on this Mahurat trading. It's going to be about energy, cotton, coffee, wheat, and gold and silver and platinum that you can add in your portfolio for better returns going forward in the next Samvat. With that, thank you so much for being with us this Mahurat trading on CNBC TV 18. We wish our viewers a very happy and a prosperous Diwali.